Okay, welcome everyone. Let's get into it. Monday morning stock market technical analysis. We're going to look at the charts. And again, I want to talk about the sell the rip mentality. So again, we've started we've started correcting in the markets, but corrections don't go down all at once. So you're going to have counter trend rallies along the way. And I talked about how I'm looking to sell the rip or reshort into rallies, or if you're long, maybe exit longs into rallies. Ultimately, it looks like we're looking to go lower in the near future. So I want to point that out and see what we got. Triple Qs. So Triple Qs is rallying into the 200-day right here at about 366, and we're also creating somewhat of a flag pattern. You can see we're kind of creating this flag. So that might project us for a breakdown, kind of a bear flag, where we would break down and continue lower. That sets us up for a pretty good sized move if that flag continues to break down. I don't know if that flag is going to play out, but that 200-day moving average, and we have some resistance right here at about 361. You can see we had some reactions right in that area from the past. So a zone of resistance, we're coming into a zone of resistance basically. We could continue to rally up a little bit more, potentially up to this area of about 377.59. That's kind of this former zone of support right in here. And also that was your former high right there. So that's that level. Watch for that. I wouldn't expect it to go much beyond that. Okay. You have the potential to rally up there, but much beyond that, we'll start to kind of, reevaluate, because the other sectors will look a little different. I do think we're likely going to get rejected here pretty soon. Let's look at XLK. This is another way to look at the tech sector. This does not have Amazon in it, but it does have, most of the other tech stocks. And you can see here, we're at key resistance right now. So on the daily chart, these are all the ranges of support. We were building negative divergence up here at the highs. We finally broke our trend line. So there's your breakdown, and we're coming in for a back test now. So again, this is objective area to short at. We could pop up to this other range right in here at about 164, we'll call it. Anything beyond that, we really shouldn't go. So I'd be looking to stop out, anything above here. But we are at resistance here. We should get rejected here, or maybe just slightly higher. Zone of resistance right in here. So I'm liking this as a short entry, and I did go short on this one. Again, I'm looking to sell the rip. So we're looking to short into rallies. Flipping over to the SPY, we're also creating a little bit of a bear flagging pattern. You can see here we've got the flag pull. We're kind of flagging out, and I think we could continue to the downside. This is a continuation pattern, so oftentimes these resolve to the downside. We also we're above the 200-day moving average, and we have, big resistance right there at about 450 coming into that. That is, that's a clear area of support from the past, and that should hold off this rally. The other thing is this red line right here. This is a big zone of resistance, and if I go to the weekly chart, you can see what's going on here. So that red line is coming off your 2009 lows on your weekly chart. This is trend line. This is your bull market, basically. We broke down in 2018, rejected again on the COVID crash, and then they've broken it again. So there's your big breakdown sell signal on the weekly chart, and we're rallying up into that resistance zone again. So this is the 451. Really shouldn't go much beyond that. Maybe give it a little bit of room, because I might pop it slightly and run some stops. But, I would expect the shorts and the sellers to start selling into this range. We might not even get up there. They might step in early. And when everyone's looking at a key level of resistance, oftentimes they step in early. So we're very close to that. I think, maybe a maximum of another 0.5% or so to the upside, and we should start to get rejected. Small caps, flip back to the daily here. So small caps broke down. We got a little bit of a bullish rising wedge. We're starting to break out. So small caps could potentially keep rallying. Big resistance right there at that 208.75, 209 area. That's that huge zone that was support for over a year. We've now broken down, so lots of resistance overhead. And again, that's why I look to reshort. So right there at 205 is a minor level of resistance, and big resistance right there at that 209. So anything into that area is an objective area to start to reshort and sell the rip. And I would look for that to get rejected and a continuation to the downside down to our next target at about 169.50. That zone of support right there. Okay, so that's what I see on that one. Gold. Okay, so gold sold down basically to support. That's the area that I talked about being the next level of major support, and we're still holding that support. So I don't see any technical posture, any change in the posture on gold. What I see is a coiling, kind of an isometrical triangle. We've been building this coil for quite a while, coming towards the apex of this triangle, and we should make a decision. Now, expect some squirrely moves in this area, because usually, if this is going to break out, it's probably not going to be very clean. We're probably going to maybe break down, run some stops, then break out to the upside. I'd expect at least some sort of fake out move prior to the real breakout or breakdown move. We could break down. But I think they're likely going to make it look like it's going to go one way prior to actually making that breakout or breakdown. We are at big support though right now. As I roll out on the daily, you can see here's going back to 2018. Here's your bull market in gold. This is gold bullion. So every time we've hit this trend line, we've held support. And there we are again. Another tag of that support line and holding. So most likely, if we break to the upside, we're not going to revisit this trend line for a while. I think we're going to have a pretty impulsive breakout to the upside, and we won't come back into this trend line for quite a while at much higher prices. And if we break down, we'll have to reevaluate and see where we're going potentially on a breakdown. Okay, Tesla. So I covered my Tesla short when we tagged that 200-day moving average right there at 814.84, roughly right in there. I saw the tag, we undercut it and recovered the 200. That made sense to cover the short and wait for a kickback rally or an opportunity to reshort it. We are moving higher right up into resistance at about 968. So you'll see that key level, that key support level, that trend line on Tesla that we have been marching higher. We broke down, back tested once, broke down. They're coming back in for another back test. So we'll see if you can get all the way up there. I don't know if it's, we'll see, It really depends on what the market does. And if we start to reject into some of these resistance levels, I think that's the highest probability. So we'll look for Tesla to continue lower. But right now, it's just not at a level that I'm interested in reshorting it quite yet. Qualcomm is, they're popping it above this level of resistance, or right here at about 170, 150, but I suspect we're going to fail probably very soon. So you'll see right here, we're slightly above it, but let's see how the day closes out and really what happens. Previously we popped above that and we failed as well. So again, it really goes back to where the tech sector is going to get rejected, but just going back to that XLK chart, we are pretty much at key major resistance. So if this starts to get rejected here, then those tech stocks should go with it. And just, the thing is that everyone wants to short when the market is plunging downward. This is where everyone wants to short as we get down here. And I see a lot of comments on my channel where people just had started taking shorts, as we were approaching down here. They said they just took a short. And that's the thing is, for shorting, you don't want to wait till it's obvious and when everyone wants to short. You need to, you want to short as you approach into key technical levels of resistance, or when you have those initial technical breakdowns of support. But again, it's just kind of the nature of the beast that the majority of people want to wait till things are crashing, and that's when they want to short. And then everyone wants to go long after everything's rallying. Again, this is we short, we cover into support areas, it rallies back into resistance, we reshort for the next leg lower, and we look to cover as we, head lower. And again, I could be wrong. This could be a false breakdown and we could rally right here. But if I'm wrong on this XLK short, I'm wrong small, because I've shorted right here at major resistance. I'm willing to give it up to this 164 area with a stop there. So I'm wrong small. If I short all the way down here, then by the time you realize you're wrong way up here, you're wrong a lot larger. So again, it's all about keeping your trades at key levels to minimize your losses and maximize your gains. I teach all these concepts in my technical analysis course, link in the description below. So check that out if you guys haven't done so. And just kind of scanning through some of these other short ideas I've talked about, I just don't see any change. Forward just kind of chopping around between resistance, which is the trend line, and support right there at about 1917. I think we're going lower. LPX, just kind of chopping around. We had a breakdown of the key technical support level. I think we're heading lower, but we're just kind of consolidating and chopping around. LLY, this one broke our key level here. So here's your key daily support. Broke down, hit the 200-day moving average, and we're seeing that bounce. So we could bounce up to here, up to this trend line, and then reject. I'm willing to give it some room within this range, but I don't see any real technical change in the breakdown. Big negative divergence on this one in play, so tells me we're likely, whether we backtest first, likely to continue to trend downward. And just a lesson, if you can't ride out a counter trend bounce, if you think the trend is down and you get a counter trend bounce, because you're always going to have bounces and drops that go against the trend in a position. If you can't ride out a counter trend bounce because you just can't stand the losses, you've got too large of a position. All right, your position's too large and it's emotionally triggering you to worry about that trade, even though there's no technical change in the trade setup. So that's just a lesson that sometimes you have to learn. But sell down your position to the point where you can ride out the counter trend bounces and you're able to just cleanly read the charts. And as long as there's no technical change, then we can stick with the trade. Lift, little rally today, up 6%. This one, obviously, we could rally back up to this resistance level 43.50. But the thing is, we're so close to filling this gap right here at 31.95. I think we're likely going to drop down and fill that gap before we rally too much more. So I am looking for kind of a final move down, fill the gap, close out the trade, and move on from that one. This one does, on the daily, we're starting to build bullish divergence on the daily right here. You can see it right there. So keep that in mind. We do have some bullish divergence. And but again, divergence isn't a reason to just get long something, even though there's bullish divergence. But it does tell me that we're likely going to start to rally, soon. We're so close to that gap. I think we're very likely to run down and fill the gap and then start the rally. So I'm going to give it a little more room. And C's, there's no change from the last week. We're just consolidating within this area. We've got some support right there at about 57.73 and the 200-day moving average right below. So area of support, we need to see that go for the continuation to the downside. I think we're going to get it, but, until then, maybe we bounce up and hit resistance at this trend line. So those are all key levels to watch. So I don't know if anybody's still in this Snap trade, but Snap recently came down and filled this gap. This was a target that I had, kind of my final target at 29 bucks. There's the gap right there, this big gap, and we just came down and filled that gap. So we've recovered that. If I had to go any direction on this, I'd probably look to be bullish on this trade. But again, it really is going to determine where the markets go, because there is another major level of support right here at 20.50. All right, on Snap, that's really good support. And we could potentially, get that gap fill bounce, rally up. We have a small downtrend line right here, so potential target would be maybe that downtrend line, rally up to about 44.50 or so, and then roll over. Things to watch there. But I wouldn't want to be short anymore on this trade. I think it's been a pretty good short, from this gap. We had an island cluster reversal top right here, so your entry came right here, and this thing fell 50%. In a pretty quick order. So done with that one. And I'll wrap up with XLF. So XLF on the daily chart. Here's your March 2020 lows. Here's your uptrend line that I have marked out. Broke trend, Came in for a back test right up in here. Didn't quite get up there, but got pretty close. Created this bearish rising wedge pattern. Broke down, and we're back below this key resistance level about 38.91. So pretty much right where we're at right now. We're back testing. You can see the last, couple days we got rejected at that level as well. So there we are at resistance. I would expect us to get rejected right here. So I think it's objective to short here, in my opinion. And the 200-day below. So kind of stuck within this range. I am looking for more downside in the financials XLF. Next level supports down here at about 35.03. Okay, so again, just the theme that I'm trying to talk about is sell the rip. I'm starting to layer back into short positions now that I had covered last week, starting to reshort those. They're all, starting to get pretty interesting. AVGO is another one. We could go up a little higher. I'm looking to reshort right there at 593 area. That's key resistance, a little bit more to go. But all of these are starting to rally into the key resistance levels or getting very close. So starting to layer into those shorts. I'm not taking the full position all at once. I'm just going to add into those as we rally into this resistance, looking for rejection. Okay, guys, leave me a thumbs up on your way out, and I will catch you on the next one. Bye.